What's going on, everyone? This is MK, your favorite life insurance agent. Today, we're going to be talking about the 3 different types of life insurance policies that are out there. We're going to go ahead and jump into it. And if one of our agents sent you this video, watch it all the way through and tell them your takeaways. So the first type of life insurance policies that's out there is term. So when you hear term, I want you to think of terminate or temporary. The beautiful part is that it's affordable. The downside is that it expires. So typically you only get anywhere from about 10 to 30 years of coverage. Another thing that makes our product special is that our term policies come with something called living benefits. So let me ask you, do you know of anyone that maybe might have had a heart attack, a stroke, or a cancer, or got a bad accident before? Probably so. Would you agree that, people who go through those medical hardships will probably also experience some type of financial hardship, probably because they can't work? You probably know people like that as well. And so with living benefits, it's a new version of life insurance that covers people, God forbid they were to get sick. And when that takes place, they can actually accelerate anywhere from 20 to 90% of the overall amount of life insurance that they have. One of our own agents, young, 38 years young, had a massive stroke. Thank God he survived it. And when he had that stroke, one of our partner life insurance companies direct deposited to his bank account over $200,000, all because he got sick. And so having a policy with living benefits, even if you buy a term policy, you definitely want to make sure that it has living benefits, okay? Because God forbid you were to get sick, you can literally accelerate the overall amount of life insurance while you're alive, and you don't have to pay it back. So let's get back to this. So as I mentioned, it expires. So let's say this example, I have a 34-year-old woman. She's covered from 34 to 64 years old. And let's say she's paying about $30 a month for a 30-year term policy, about $1 a day. She's in great health. It's a $500,000 policy. God forbid something happens to her in between this time period, her family will receive the full $500,000 if she were to pass away. Now, let's say nothing happens and she turns 65 years old. The money that she put inside of the policy would go away because she no longer has this coverage because the policy would expire, right? You're like, well, I don't get any of my money back. Not with this type of policy, but realize that you were only giving the life insurance companies $1 a day, right? That's cheaper than a cup of coffee. You go to Starbucks every week, you go out to eat all the time, you spend $30 any day on food. You just blink. You walk out the house, big toe out the house. You spend $30. You can afford $30 a month for a term policy. But that's term for you. It's affordable, but it does expire. It's not for everybody, but it is for those who maybe have a tight budget, or maybe you need a lot of life insurance for a cheaper price. Term is a great option. Next one over here is ROP. So just like term, your policy expires. However, when your policy expires, you get all the money you put inside of your policy back. So most people that get this type of plan, they typically have a mortgage on their home, and they want to make sure they have enough life insurance, God forbid something happens to them, that they can pay off their house and their family is not struggling, especially if you're the breadwinner. And so in this example, ROP costs a little bit more than term. So let's just say in this example, it's $100 a month, and they were paying for $500,000 of coverage. God forbid something happens in between the time period, their family receives $500,000. Let's say nothing happens, the policy expires, they would get every single penny they put inside of that policy back, which is $36,000. Okay. Now, I typically know there's 3 different type of people here. You let me know which one you are. Person 1, they don't have any life insurance at all. By the way, that's literally 48% of the population. That's every other person that we run into. Person 2, they only have life insurance through the job. Nothing wrong with you only having life insurance through the job, but you don't have life insurance through the job. Job is life insurance on you. I remember when I first got into the industry, one of my agents sat down with a gentleman, did a whole assessment, and, gave him paperwork, everything. He says, you know what? I'm good. I got life insurance through my job. They obviously advised him on having life insurance outside of it. He felt like he was good. And then a year goes by. Now this is COVID. His sister actually ends up finding the paperwork. And so she calls us and she says, hey, I was calling to see if my brother got any life insurance because he unexpectedly just recently passed. We sent our condolences to her and we informed her, hey, he mentioned he had it through his job. He didn't get anything through us. She says, well, a couple months before my brother passed, he lost his job. And so now his sister is calling around trying to figure out, does he have any life insurance? Do I have to do Google Fund Me? Do I have to deplete my retirement accounts? Do I have to deplete my savings account? Do I have to pass around a hat? All because he unexpectedly passed. Nobody knows when they're expected to pass away. And you definitely don't want to depend your most valuable asset on a job because your job can literally replace you in 5 minutes. And in this third group of people that I noticed, they have life insurance, but they may or may not know if it's the new version or the old version. You may say, what's the difference? The new version of life insurance has living benefits. By the way, only 23 companies offer full living benefits. Chances are if you have a life insurance policy, it may or may not be the new version. We're more than happy to give you a free overview. And so my question to you is, which of the 3 are you? Do you not have life insurance at all? Do you only have it through the job, or do you have it outside of it and you're not sure if it's a new or old version? Either way, we're willing to help and probably educate you on all three. Last but not least is permanent life insurance. All permanent means is lifetime coverage. It goes to 120, 121 years old. Life insurance company said if you live past that, you're on your own, okay? And it also has a benefit of cash value. It also comes with living benefits. The downside is that it costs more than a term policy because you have it for the rest of your life. The cool part is that you lock in the cost of life insurance when you're young and when you're healthy, right? Depending on the time that you get it. So how this works, let's say you're contributing $250 a month. Some of your money is going to go towards the death benefit, which is paying for the cost of life insurance. Then the other component can go towards this cash value bucket where your money can grow and compound over time. Maybe you can borrow it from the future. Maybe you can leverage it for retirement. You can access it tax advantage, potentially tax free. Now, not all permanent policies build cash value, but most of them do. If cash value is not a priority for you, just want a permanent life insurance policy, you can lock in something like that. If you want to be your own bank, infinite banking, have uninterrupted compound interest, send your kid off to college, put money down for a house, supplement your retirement in a tax-free way, permanent life insurance policy can be a great option for you, assuming that it makes sense. And as long as you're properly educated and informed, you'll know if it makes sense for you or not. Okay, so these are the three different types of life insurance. You have term, ROP, and permanent. Life insurance is not a one size fits all. Okay, so this is why it's so important to do business with a broker that you can actually trust. And when I say a broker, it means somebody who deals with multiple different life insurance companies and not just tied to one company that's only pushing one product. And so if you like this video, get back to the person that sent it out to you, put your comments below, and as always, hit that follow. Let's go. Shush.